Replit AI agent accidentally deleted a company's database despite explicit human commands to stop Gold Card members. You can now delegate your online shopping and booking tasks directly to an AI agent. Well, I don't like that we are going to support stablecoins, but our customers want to use them, end quote. Break the 95% market duopoly held by Visa and Mastercard in the UK. But now you can just go with your PayPal and then start basically using PayPal QR code directly to make payments in China, which I think a very good development. This one is very interesting, guys. Mastercard is requesting Brazilian payment processors to absorb half of the nearly $1 billion in losses. Welcome back to another episode of On the Ground, where we cover weekly top fintech, payment, banking, and technology news. This week was also very, very interesting with a lot of interesting news from top companies. So we are starting today with the news about Cash App. Cash App has officially launched a phased rollout of USDC stablecoin payments to its nearly 60 million active users. So basically, the feature went live for roughly 25% of users on Wednesday, with full, basically 100% availability targeted by the end of the week, which means when this episode goes live, basically 100% of the Cash App customers will have access to USDC stablecoin. So, however, it seems like Jack Dorsey was not very happy about this move because he's a long time Bitcoin maximalist, and he said this was they implemented this feature because the users demanded it. And in an interview, he said, well, I don't like that we are going to support stablecoins, but our customers want to use them, end quote. End quote again, I don't think it's wise to go from one gatekeeper to another, which means they will still be dependent on Circle, which issues USDC. If you go to details of this new feature, basically Cash App handles, multi-chain infrastructure. So users can send or receive USDC across Solana, Ethereum, Polygon, and Arbitrum. So stablecoin operates entirely behind the scenes. Incoming USDC automatically converts to user standard fiat USD Cash App balance, meaning customers do not need to manage a separate crypto wallet. Block is also positioning USDC strictly as high-speed payment rail rather than a yield or investment product. So do not expect any yield. It's just payment rails. Also, if we talk about security and limits, because this is a on-chain transaction, which is irreversible, Cash App implemented tight security limits and geographic restrictions. So sending limits are 2,000 on a daily basis and 5,000 for a week, and receiving limits are 10,000 on a weekly basis. So due to strict local regulatory framework, this feature is completely unavailable in New York, guys. So the rollout comes at a historic high for the broader stablecoin ecosystem. As you know, in this year and last year, everyone is trying to implement stablecoin solutions, and the market capitalization of stablecoins reached $322 billion, surpassing the foreign exchange reserves of major nations, including the United Kingdom and Canada. I will keep watching how this development will evolve. And the next one is about Robinhood. The company has officially launched two groundbreaking features called agentic trading and agentic credit card, allowing users to link external AI agents like ChatGPT or Claude autonomously, execute stock trades and market purchases. This is interesting development again. So the company is now implementing a lot of different features. Very recently, they launched basically prediction markets. So they are shifting from consumer finance, now moving into AI, from like a simple advisory chatbot to an active wallet wielding transaction assistant. If we go into details, basically you can connect your preferred AI system to Robinhood using open standard connection, and the AI does not get free reign over your main portfolio. You must set up a separate, isolated agentic trading account and fund it manually. The beta is currently limited to US equities, but Robinhood plans to expand its capabilities to options, cryptocurrencies, futures, and prediction markets. Also, you can instruct the AI to do complex ongoing tasks like rebalancing the portfolio or like basically build a diversified portfolio from scratch for you based on your needs and wants. Let's talk about the second feature, agentic credit card. So it's available for Robinhood Gold card members. You can now delegate your online shopping and booking tasks directly to an AI agent. Everyone may start thinking about the security part of the things because if you allow the AI, it can literally do anything, especially when it starts to hallucinate. However, Robinhood says the AI is restricted to a unique virtual card number and it never sees your primary credit card information or main banking data. You can give the agent highly specific parameters such as buy the sneakers the second the price drops below 300. So basically, you can set up the limits when those limits are met. Basically, AI will start executing the order that you set up. And the AI actively scans the web for the best product available and lowest pricing before pulling trigger. An interesting part with the rising cost of AI tokens, how this would work. AI companies moving away from flat rates. When you subscribe, you basically will indefinitely use AI to token-based pricing. It's so far being implemented for corporate customers, but I'm expecting it soon will come to individual customers as well. And then when it starts hallucinating, what's going to happen? So this is very interesting. Let's talk about guardrails once again. AI agents, as I said already, known to misinterpret instructions, hallucinate, or make bad bets. And Robinhood has built several security measures directly into the application. You can control the exact dollar cap your agent can trade or charge the virtual card. You can toggle a setting that forces the AI to request your explicit sign off via a preview notification before any purchase or trade goes through. You can view a real-time activity and P&L feed in the app and completely disconnect or disable AI agent with a single tap, guys. Ultimately, Robinhood's terms state that you are responsible for all activity, obviously, gains and losses incurred by your AI agents. So, guys, you have to be careful before giving control to any AI tools because you never know. But hopefully, as everything evolves, AI will also evolve in terms of financial operations. And hopefully, in the long term, we will be able to fully trust the AI to execute financial orders on behalf of us. Moving to next news, guys. Visa has made an undisclosed strategic investment in the AI coding platform Replit to develop secure agent payment rails for AI applications. This news was announced on 28th of May, and the partnership aims to integrate payment capabilities directly into Replit's software creation environment, which allows developers and the AI agents they build to autonomously execute and accept transactions without leaving the platform. The collaboration embeds Visa's intelligent commerce into Replit. This enables AI agents to recommend, decide, and securely transact on behalf of human users again. The companies at the moment are exploring Visa's trusted agent protocol to let AI agents securely identify themselves, share their intent and user context to verify machine-to-machine transactions. For the context, we have to say that at the moment, Visa's 1,000 employees are already using Replit as a core prototyping and internal development tool. Okay, the technical project is currently in an explanatory stage with no formal joint production just yet, so we are looking forward to it. So from the Replit side, the investment, according to the news, underscores Replit's strong momentum. Guys, they grew from $3 billion to $9 billion just in under 6 months. I mean, It's a huge growth, just like any other AI company. CEO Amjad Masad stated that enterprise net retention has reached 300% in some segments, indicating highly sticky software environment. But guys, we have to again highlight some controversies around this partnership. Skeptics basically point to a high-profile incidents where Replit AI agent accidentally deleted a company's database despite explicit human commands to stop giving autonomous AI agents credit card access raises fears that AI hallucinations could empty a bank account before human can intervene. I mean, that's a real concern. Another concern is everyday users have already raised alarms over runaway billing charges caused by Replit agents executing repetitive tasks rapidly without default spending caps. This is one of the most important things. You have to be very careful. Again, this goes back to the point of AI could hallucinate and basically do the same thing again and again, which will like drain your wallet. And the last concern or controversy, I would say, crypto and Web3 advocates argued that machine-to-machine payments should be handled by decentralized stablecoins because they fear that Visa's trusted agent protocol will become a centralized. Basically, you will have to heavily rely on Visa to do any development or any movement. Potential use cases, however, are a developer can build an AI app on the Replit that autonomously or automatically purchases its own external APIs, negotiate compute power, and charge users on the spot, creating a self-sustaining independent software entities. Another use case is frictionless enterprise B2B purchasing, which means enterprise AI agents can monitor a company's software needs, discover an efficiency tool, test in a safe sandbox, negotiate a micro contract, and pay for it via corporate Visa rails. And of course, the last potential use case could be consumer facing AI agents, which can act as a personal assistant that do more than just suggest products. They can finally execute on behalf of you. They can find the cheapest pair of, let's say, headphones, use the internet or automation to navigate a retailer's checkout page and securely execute the purchase on behalf of the customer, basically. Market reaction is mixed. For example, Wall Street is very cautious. Payment processors have faced, because again, pressure as investors worry that AI agents will bypass credit cards entirely to look for cheaper transaction methods. Reports showing AI agents are successfully transacting via crypto stablecoin rails previously caused temporary drop in legacy network stocks. I mean, on the one hand, stablecoins could be a threat to Visa and Mastercard or any other card rail, but again, we need to understand that Visa and Mastercard have been in the market for some time. They are very well established in many different markets. And as you know, as soon as there is a new technology, they start heavily investing into that so that they are basically part of that technology. And the same is happening in case of stable coins. We know that MasterCard acquired BVNK, a stable coin payment rail and issuer. Another example is Stripe. They also acquired Bridge. And I think we will see more consolidation in terms of stable coins. And basically this card rails, they will not be left out from this payment rails as well. Continuing the topic of payment rails, guys, the UK Payment Initiative UKPI is preparing to launch a new domestic payment network to break the 95% market duopoly held by Visa and Mastercard in the UK. Backed by the FCA, Financial Conduct Authority in the UK, the strategy established a shared rulebook to transition everyday transactions into open banking infrastructure. So this initiative is being launched by, let me open the URL here, by biggest banks in the UK. Those include Barclays, HSBC, Lloyds, and NatWest among the lenders backing this new initiative. UK Payment Initiative is a company set up under the Financial Conduct Authority whose founding shareholders include the UK's 4 largest lenders, which I already mentioned, and there are some minor players as well. And those include Nationwide, Monzo, Revolut, Starlink, Santander, and PayPoint. They're also part of this initiative, basically, guys. Everyone is trying to somehow compete with Visa, Mastercard, or basically move away from dependency on these payment rails. How well it's being executed, time will show. Let's continue dive deeper into this topic. So basically, how the new scheme works is that instead of building entirely separate physical credit card or debit card systems from scratch, the UKPI is introducing a sovereign alternative to build on different financial architecture. It's basically account-to-account payments. The scheme leverages open banking to clear payments directly from buyer's bank account to merchant's account. This completely bypasses traditional card intermediary fees, one of the main concerns, actually. The structure is closely modeled of highly successful international networks such as Brazil's PIX and India's Unified Payment Interface, which is UPI, and it creates a uniform commercial model and acceptance mark for shops and operational standards to ensure it becomes a trusted retail method. So, guys, why the shift is happening now? The motivation behind the network is driven by both commercial pressure and international politics. I think international politics plays a huge role here. Let's start with that. UK policymakers and the Bank of England grew increasingly anxious over how reliant the British economy is on two US-based companies. Observers note that how quickly Russia was cut off from global commerce when Visa and Mastercard pulled out of the country in 2022. There are strategic fears that the future diplomatic tensions or aggressive foreign policy shifts from Washington could jeopardize UK payment continuity. That's a real threat, actually. That's very much a real threat. If I think about how much people use payment cards by Visa or Mastercard, that's a huge one. And the second one is card transaction fees. Card transaction fees erode the profitability of British merchants daily. A homegrown alternative rail creates a direct competition, applying pressure on credit giants to lower their interchange and scheme fees. Yeah, I know from the latest news in the market, like different kinds of groups and coalitions are trying to sue Visa and Mastercard and somehow try to lower interchange fees. So far, I don't know how successful they were because the card schemes they always try to find a way to keep their monopoly, keep the fees beneficial for themselves. And the last point is the UK. This move basically in the UK mirrors the continent's European Payment Initiative, EPI, which recently launched its own A2A alternative called Vero, WERO, in countries like Belgium, France, and Germany. Neither Visa nor MasterCard are being entirely frozen out of this process. Most companies hold stakes in wider modernization projects, allowing for diplomatic transition rather than a direct financial war. Nobody wants to go into a war with biggest players in the market. And if we talk about biggest players in the market, we have to say China is one of the biggest payment markets in the world. You know, guys, China was rather closed, and it is still closed for the most part for international payment rails. However, there seems to be a change. Tencent has officially integrated its cross-border payment platform, TenPay, with PayPal, allowing US PayPal users to make purchases across mainland China via WeChat Pay, a massive QR code merchant network. This partnership removes the friction of downloading domestic Chinese application, enabling travelers to simply utilize their existing home e-wallets, seamlessly pay local vendors, transit systems, and restaurants. So, guys, let's talk about key points here because this is important. This is very important. The service is immediately available to US-based PayPal accounts with plans to expand to other global markets in sequential phases. The technical link leverages a single point access cross-border QR gateway engineered under the guidance of the People's Bank of China. Visitors can scan or display their codes at tens of millions of existing Weixin Pay, if I'm saying correctly, so WeChat Pay, basically merchant setups across the country. So why this is being done? First is that first time to look, guys, over the last decade, China transformed again, as I said, into world's largest and most exclusive mobile payment network. The market is dominated by WeChat Pay, by Tencent, and Ant Group's Alipay, because everyday vendors like a street food court, major subway systems phase out cash in China, and traditional point of sales credit card terminals also, not popular there, I would say. International tourists basically found themselves like digitally stranded. Like when you arrive, you have to either download the local application and then go through the whole process of registering and onboarding. And I'm not sure if that is possible because, again, I know that in the UK, for example, or Europe, you can create a Revolut account using your Visa, but I'm not sure if that's possible in China. Just using Visa, you can create a bank account. But this is another point. So basically, it still creates a lot of friction for you to go through these steps. But now you can just go with your PayPal and then start basically using PayPal QR code directly to make payments in China, which is, I think, a very good development. And I think it's a very good development for PayPal as well. This is basically makes it attractive for people who are traveling to China. And then that way, basically, PayPal can start generating more revenue. And on the other hand, this new partnership basically breeds this ecosystem directly with PayPal. As I said, tourists can now lend in China and scan standard local WeChat QR codes using their native PayPal application. So this integration is not just a commercial deal, it's a part of a broader, highly coordinated initiative according to Chinese regulators. What interesting development. I will keep watching it. And the next news is about Mastercard in Brazil. This one is very interesting, guys. Mastercard is requesting Brazilian payment processors to absorb half of the nearly $1 billion in losses resulting from the collapse of Will Financier, a fintech subsidiary of Banco Mastercard. The bank's liquidation left Mastercard on the hook to reimburse merchant acquirers for unsettled transactions. Let me give you a bit of information about this incident. So what happened in November 2025, the Central Bank of Brazil ordered liquidation of Banco Master, a mid-sized lender, after police probe. The collapse was tied to severe liquidity crisis and estimated accounting fraud of up to 17 billion Brazilian dollars involving trading of non-existent credit and securities. On the same day, bank's operations were halted. Authorities arrested the bank's controlling shareholder, Daniel Worcaro. And after that, Master was shut down. The central bank initially opted not to liquidate its digital fintech unit, Willbank. The regulator hoped that it would be able to sell it, but however, there were no interest in purchasing this company. And by January 2026, Willbank suffered acute liquidity stress and breached its transaction settlement schedule on the Mastercard network. On January 21, 2026, Mastercard officially suspended the Willbank cards from its network. Hours later, the central bank declared that definitive extrajudicial liquidation of Willbank Financier. So, in a standard credit card, debit card loop, merchant acquirers pass client purchases basically along to the network, which ensures funds move from the issuing bank to the merchants. When Willbank collapsed, it left 5 billion Brazilian dollars, which is $997 million in the processed card transactions, completely unbanked by cash, basically. And as I mentioned, Mastercard now proposing to basically cost sharing model with acquirers, splitting the bill. Mastercard asking processors to absorb 50% of the remaining 2.5 billion Brazilian dollars. Guys, I have to say, Mastercard already reimbursed merchant acquirers for about half of the outstanding 5 billion. So now the remaining 2.5 billion Brazilian dollars should be, according to Mastercard, divided between Mastercard and other issuers in the market. Mastercard has also proposed that any funds recovered from card customers be used to repay itself first before sending any remaining recovered capital to the processor. So the initial reaction is interesting. Processors like CLO have publicly stated they do not believe that they are responsible for the payments that Mastercard is seeking out to split, the merchant acquirers maintain that Mastercard should bear the full burden of these liabilities. That's a very interesting development, guys. Let's keep watching how this will evolve moving forward. Guys, these were all the news for this week. We will keep watching the latest developments in the market. We are on the ground, as you know. If you like this format, do not forget to subscribe to our YouTube, Spotify, Apple Podcasts, X channels to stay tuned about latest developments. And we'll see you the next week. Take care.